Welcome to the Silent Trading channel on Wednesday the 18th of March. Today I'll be analyzing the gold chart to see where right now why is the chart breaking below so hard after going into a sideways and after finishing its sideways. But before I start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. I'll first start on a 4-hour time frame or the 4-hour candle. As you can see, the latest 4-hour candle has already break below, right? The 4-hour candle has already goes into an expansion below right now, a hard break below, and this break below has shown us that what I've analyzed beforehand, that if price is slowly going to a sideways down direction or a sideways up direction, that is a market trying to accumulate buy side volume and sell side volume, right? And since from yesterday, after moving in a sideways triangular frame, the chart then start moving in a sideways down direction, or we can say it is moving in a slow descent, right? And after enough descension and after enough accumulation of buy side volume at support over here, support at 5,000, the weak support, this 4-hour candle support, and this the last support over here. After the market has accumulated enough buy side volume, it then start to break below. Why is it breaking below? Because it is dragging all of these buyers over here into a deep drawdown, forcing all of the buyers into liquidation, or at least forcing buyers into closing their position for those who didn't place their stop loss, right? For those who didn't place their stop loss are forced into closing their position after the chart has break below so much. And how much is it? You can measure it. How much is this break below? About 117,000. No, we can call it 11,000 pips. 11,000 pips is enough to pressure position holders into closing their position, or is also enough to force position holder into liquidation, right? Because a full breakout of 10,000 pips in one 4-hour candle is a really hard break, right? I'll call it a full elimination of buy side volume, because after accumulating enough buy side volume at various support over here, the chart then break below, as I have analyzed beforehand, right? I've analyzed for you guys yesterday that if the chart is suddenly going to a downside direction, if it is going into a downside direction, a sideways down direction, right, and a slow descent down, it is accumulating buy side volume, and after it has accumulated enough buy side volume, the next thing the chart will have to do is to break, right? And as you can see, it really breaks below right now. And the thing is, if you're gonna buy, can we buy at this spot over here? We can, right? We can, but why? We need to first look at the big time frame or the daily time frame, the higher time frame, to see whether price has touched any more support, correct? Now we can see that there is a support over here on the daily time frame, and price right now has touched this support, which means it has started accumulating more buy side volume over here, or it has started to accumulate sell stops over here, right? So if people are not going to buy over here, then they are going to place their sell stop over here. Why is it so? Because their buy side position above is really in a heavy drawdown, and a heavy drawdown is bound to force them into liquidation if they do not do something quick, right? So the full breakdown over here, the full break below over here, is forcing them into either closing their position, is forcing them into either liquidation, or the last thing to do is to open a sell side position to hedge their losses, to hedge their drawdown, right? So this spot is the most spot that I want to see that the chart is is suddenly pulling back, or is the chart going to push down further? If the chart is pushing down further, the next buy limit that I'm going to place is over here. It's at this low wick over here, because why? Every time the chart touches and attack a support, it start accumulating buy side volume. And after accumulating buy side volume, the next thing the chart will have to do is to take out all those buy side volume, right? So taking out buy side volume means the chart has to push down further, dragging buy side holders into drawdown and forcing holders to close their position. And only after enough holders close their position will the chart start pulling back, or either close candle and then start a reversal, right? And the next thing that I'm going to analyze and I'm going to point out to you guys is, as you can see, I've drawn this daily triangular frame for a long time beforehand. So I believe there is a chance of the chart going down all the way to this triangular frame border and then start reversing from this border, right? So right now, beware of where you're entering your position, because you could enter a position at a break below, right? But the problem is, if it is still going to break below further and further, and what if it is going to break below more, a few thousand more pips, right? And then forcing you into liquidation, forcing you to closing your position. So why risk all of that, right? So by not risking is you waiting for the chart to suddenly start producing a bullish price action before you start buying. And that bullish price action has to be complete first before you can start buying, right? If the bullish price action isn't complete by breaking resistance, it is not a valid bullish price action. A valid bullish price action always has to complete that price action, always has to complete that reversal. So right now, I'm not going to be risking my portfolio into buying, because why? I believe that the chart can pull back from here, but the problem is I also believe that the chart can still push down further, because there is a triangular border over here, which means the market also still has a chance of pushing down all the way to this border, right? Pushing down all the way to this border before it can start reversing, right? So for the chart to reverse, we're not going to be looking on a daily time frame, but we are looking at the daily time frame to see if there are any more key support, right? Over here, this reversal is a key support. This is a key support. This is also a key support. And right now the chart has already touched one key support, right? Which means it is attacking this support. Attacking support means accumulating buy side volume. And then the chart is still bound to break below further. So right now I'm not going to be buying unless the 4-hour time frame start producing a bullish price action. And if possible, I will also wait for that bullish price action to be complete, and then I'll start buying at the next retracement, right? So for the daily time frame, we are only looking whether the price has already attacked more support or not, right? So we come back to the 4-hour time frame and we see that the 4-hour time frame, is it going to push down further, or is it going to start pulling back? If it is going to start pulling back, we are going to see whether the pullback is just a pullback to close a candle, right? If it is pulling back and it start doing a reversal, but what if it is not doing a reversal but just a top wick created to push down further? So if a reversal over here isn't complete yet, I'm not going to be buying on a 4-hour time frame because it is too risky, right? But the problem is you will miss a lot of chance if you're waiting for the reversal to be complete. So if 4-hour candle is not sufficient enough for you to watch a reversal happen, you're going to be lowering down to the 1-hour candle, and then at least wait for the 1-hour candle to start producing a bullish price action before you start buying. Which means in the next 6 minutes, if this 1-hour candle close and start opening and producing a bullish price action and can also complete that bullish price action, the next candle retracement is where I'm going to buy, and then wait for the price to break resistance. If the price is not going to break resistance but instead pushing down further, I'm going to be holding on to that position and I'm going to wait for the next best possible price to start buying. So if you have your first position over here, just one position isn't enough to force you into liquidation. But if you're already holding on to one position around here right now, and the chart start moving down further, the next position must be the best possible position you can ever find in order to be able to take the best possible position to close the worst possible position that you have at a break-even point, right? But if not, at least wait for the bullish price action to form and then complete. If a bullish price action is formed and then complete, the next candle retracement is where I'm going to buy, either on a 1 hour time frame, either on a 4 hour time frame. That is the lowest I can give you, is a 1 hour time frame. Lower than that, you'll be risking more than you should, right? So right now, what do? You wait for a price action, you wait for a confirmation, you wait for a bullish or a bearish price action to form and be complete before you start buying, right? If a bullish and bearish price action isn't a valid one yet and you start buying and you start selling, you are risking your portfolio for the worst possible reason, right? For the worst possible reason is your emotion, right? Because why? Your emotion forces you to believe that a bullish price action is happening and it's really going to happen. So instead of you waiting for the best possible spot to enter a position and you waiting for the best confirmation to enter a position, you choose to enter a position even before a confirmation is set, which means you're using the worst reasoning is your emotion to enter a position. Correct? So right now, are you going to buy? No, I'm not gonna buy. I'm not gonna buy, right? Because why? I still believe the chart can push down further, and after the chart has already attacked more support, I also believe that this attack support over here is a support to accumulate the buy side volume. And if the chart and the market is still accumulating buy side volume, it is bound to push down further. So why must I enter at the worst possible point, at the worst possible spot that I have deemed it is not a good one? I wait for the next possible point is at least at this wick over here, right? Because touching support means accumulating, and accumulating means it has to clear off all of this accumulation. So why must I enter now instead of waiting for the next clearance of the accumulation before I start buying? If the chart is taking out buyers, only then will I start buying. Alright? So I have warned you guys before that if the chart is going into a sideways down direction, if the chart is going to a sideways up direction, never ever go against the trend. You will be risking more than you even should, right? And this is a proof that I have shown you. I am not that accurate, but I analyze in detail. I analyze with precision. I analyze based on all of my understanding, based on all of my information and my experience on the chart, to know that the chart is really accumulating buy side volume, and we are not going to buy unless a break below occurred, right? If a break below hasn't occurred yet, we are not going to be buying. And as you can see, it has already break below, right? Right now, buyers are really forced into closing their position. Buyers are really into deep drawdown right now. But if you have seen my video and you didn't buy at this spot over here at around 5,000, right now if you're buying, you will at least risk less than others about 10 times. Others who have about 5 to 10 position right now, but you only have your first position over here even if you're risking it. But at least it is a lot better than risking all the way down, buying against a trend, right? You just wait to buy at the best possible spot, at least a break below, and then start buying 1 or 2 position, and then wait for the chart to push up to clear off position and then close that position. Or if the chart is pushing down further, you will look for the next best possible buy position, right? So right now we are not entering a trade. Wait for the bullish price action to occur before you start buying. And for today, that's all I'm going to be saying to you guys, and I'll see you guys tomorrow, and I look forward to seeing you guys every single day. So for today, see ya.